Do you know that a independent contractor may, in some situations, pay less taxes than a W-2 employee? I'll show you on this segment of the Gig Geezer. If this is your first time checking out the Gig Geezer, or if you're a returning visitor of the Gig Geezer, hey, thanks for coming by. And if you would not mind, hit that subscribe button, give my content a thumbs up, share my content among others, and I definitely welcome your comments in the section below. Well, this segment of the Gig Geezer may be more time specific. The reason is that, well, while I am documenting this on Saturday, April 15, 2023, the deadline for filing taxes is midnight of midnight of Tuesday, April 18, 2023. So that means on April 18, you got until midnight to file your taxes, or you may face a penalty for failure to file your taxes. But in this segment of the Gig Geezer, as I mentioned in the teaser, I want to show you a situation in which a 1099 can legitimately pay less taxes than a W-2. I want to also qualify this by saying that I am not a professional tax preparer. I'm not an accountant. And so what I'm sharing with you is based on my experience having filed taxes as a 1099 in some capacity since 2003. I'm also sharing this based on the fact how I survived an IRS audit back almost 20 years ago, in which I was audited for saying that I was filing for an actual refund. And then when the IRS reviewed my papers, they audited me because I was claiming both mileage and gas and maintenance and those type of write-offs, when in fact I could only claim mileage. Now the IRS at that time was telling me that I actually owed them $6,000, but when I provided all my paperwork, I was slapped on the wrist, comparatively speaking, for somewhere between $600 and $800. And I will say, as I've shared in previous segments of the Gig Geezer about this, when I spoke to actual IRS attorneys, the people who actually take you to court and represent the IRS, they told me that that was actually a personal victory, what I had earned based on that audit experience. Now, admittedly, I also mailed off my tax forms today, Saturday, April 15, 2023. And the reason why I mailed it off at this late date in the tax filing season is because I owe taxes, but I may not owe as much as you would think. Now, I would venture to think also that many of you actually have W-2 jobs and you're doing gig work on the side. You may have already filed your taxes because you were expecting a return. And so I'm not mad at you, but I go into this every year knowing that I am going to pay something, but my goal is to try to minimize what I have to pay. And I can say this with clear conscience, as I've showed a couple examples in past Gig Geezer segments. I have enough legitimate expenses to offset my earnings. So that gets me to this. So that gets me to this point in which I want to share with you how a W-2 may pay more taxes than a 1099, or I can say the other way around, how a 1099 may pay less taxes or may owe less taxes than a W-2. Now, this is all based on a 2021 return. And on this 2021 return, it shows where the earnings amount, at least based on the 1040 Schedule C form, was $82,767. That was how much money that was actually earned. But if you look at on this other page here, which is the 1040 filing form, you see where there's only on line 1, wages and salaries and tips, actual W-2 earnings of $1,660. And then you look further down, line 7 is capital gain or less, Schedule D. That's for investments like crypto and all that. Okay, so that was $619. But then you see here, other income from Schedule 1, line 10, that was $56.63. So that's where that number comes in on the Schedule 1040, the Schedule C, the IRS 1040 Schedule C form, and I'm gonna get back into that. So altogether, the total income earned was $7,942. And then there were some adjustments that were made to Schedule 1 that brought it down to $7,047. So then you take into consideration the standard deduction. This filing shows that there's no taxable income. However, going back to the self-employment number, the self-employment number there on self-employment tax, that is, it was actually $700+ that was owed to the IRS. Now, there are a number of forms that an independent contractor or a self-employed person is going to file, or a sole proprietorship is going to file. And then when you get beyond the sole proprietorship, that's when you definitely need tax help or a tax preparer's assistance. And that's where I'm going to be when I file for 2023. I will need a tax preparer's assistance because I'm going to be dealing with having filled out 1099's, and there's income that's going to a business as opposed to me directly. And so I know that I'm going to have all my shit together by the end of the year, and I know I'm going to have to pay somebody more than likely to help me put together the taxes. So that's where I'm at, or at least point me in the right direction. Or I'm just going to have to do a lot of homework in order to figure out how to do it myself, one way or the other. But that said, as a 1099, we all have to fill out a 1040 form. The next form as a 1099 or self-employed business person you're going to fill out is a Form 1040 Schedule C. That is your profit or loss statement. The next form that you're going to have to fill out is a 1040 Schedule SE. That is a self-employment tax. And so if you see here, the amount that was owed for the filing year 2021 is $765. Then there's a Schedule 1 1040. That's adjustments to income. And then there's a 1040 Schedule 2, additional taxes. And since I'm also in the I also am in the Affordable Care Act, the healthcare.gov system where I get my health insurance. There's a 1040 1095A form that I have to submit with my taxes, but then there's a 8962 form, I believe that is, that I have to fill out that kind of differentiates do I owe taxes, or if there's an additional tax break based on my health insurance contributions and all. So that said, now going back to the schedule 1040C. I hope that I'm not losing folk. And by the way, if you like the content that's been provided in this segment of the Gig Geezer or in any other segment, hit that subscribe button, give my content a thumbs up, share my content among others, and I definitely welcome your comments in the section below. Now, actually, if you look at the graphic here, I have on one side W2 and on the other side 1099. Assuming the amounts that that W2 earned is going to be the same as the 1099, the federal taxable income for the this is just a guesstimation. In that, if you recall, in this segment of the Gig Geezer, I showed during that segment, I showed that there are some pre-taxable deductions that a W2 are likely to have, and those are for health insurance, vision, dental, AFLAC, or 1040 contributions. Those are considered pre-taxable, and so those reduce your taxable income. And so based on that example, we're going to use that the person contributed $1,000 a month, and so that's $12,000 that is reduced from the actual taxable income. In order to figure out what is the actual taxable income, we're going to assume that this person has no other deductions to claim. In fact, as a W-2, more than likely, your standard deduction is going to be more than enough that you're going to claim. It's going to if you had a house and you owed mortgage payment, and if you had health insurance, you can only claim if it's more than 7.5% of your adjusted gross income. More than likely, the standard deduction is going to be enough. So so that amount is $12,500. So then you're starting at $70,767 after the pre-taxable deductions. You subtract $12,500 from that amount, so that leaves you with a taxable income amount or adjusted income amount of $58,267. So then now, according to the IRS, in 2021 as a single filer with no dependents and all, you would owe the IRS $8,569. However, based on an estimate of about 10.62%, that would be the amount of how much taxes were withheld for the year of 2021. So that amount is $7,515. That doesn't include state, which is likely to be about, in the state of South Carolina, it's going to be about 5%, and then other, which would be like Medicare and all, it's going to go out to about somewhere about 3%. So that's going to be about $2,033. But the main number being $7,515. You look at what the federal government is looking for is $8,569, and the likely taxes withheld is $7,515. That W-2 is going to owe about $1,054. Now, 1099. Go back to that. Now we're going to go back to the Schedule C, which is going to be the most important form that a 1099 fills out. You see on line 1, part 1, $82,767. Go to part 2, expenses. The biggest single deduction that a 1099 is going to make is for mileage, especially as a gig worker. And so I've appeared on a couple of podcasts, this YouTube podcast this week, in which the question came up on both occasions about mileage, and that there are drivers who talk about how I'm not going to put those type of miles in my car, and I'm not going to deal with I don't want to have to deal with all that wear and tear on my vehicle because all these miles. Well, guess what? God damn it! Why are you doing gig work then? Gig work often involves your vehicle. Or at least most gig apps that we know of involve your vehicles. Now, if you're going to conduct certain business for most gig apps, you're gonna mileage is involved. And besides, if you're a W-2, and let's say that you commute 45 minutes in one way to your job, most W-2s don't complain about that commute. They don't complain about driving dutifully to that job 45 minutes there and 45 minutes back. They may complain about the traffic, but they don't complain about the fact that they're putting 90 miles a day at a minimum on their vehicle. So the other thing is that you can't claim commute miles, whether you're a 1099 or a W-2. So you're losing right from the start. But my point has always been, and has been very consistent. If you're going to do this, why are you complaining about mileage? Drive the motherfucking vehicle. You're going to make more money using your vehicle than you will ever get on a vehicle if you're trying to sell it or trade it in. That is just a given fact. You will make more money with using your vehicle for gig work than you will ever get trading it in or selling it. So, if you look at part 2, line 9, on this return, car and truck expenses based on mileage, and that's on page 2. But the miles claimed for business that year was 72,616 miles, and so based on the deduction for that year, based on the calculation of deduction, it turned out to be $40,665. You're not going to be. You won't, unless you've got a lot of shit that you can provide, a lot of shit. And even then, if you're expecting a return, you're probably going to be audited as a W-2. These are some of the advantages that a 1099 has with their returns. Now you look at the other lines, and there's for insurance and other health and other type of expenses claimed. But the biggest single deduction, again, is mileage. Keep that in mind, y'all. You complain about putting miles in your vehicle, but I hope you realize that those miles are 1099's best friend. So when you claim all the deductions, on line 28, it says total expenses $77,043, giving you a tentative profit or loss of $5,633, a profit of $5,633. So, as it turns out, when you go back to the 1040 form, the person who filed this return, based on the self-employment tax calculation, which is on this particular page here, that's the 1040 SE. All right, let's look at that. You have to put in the amount there on that profit and loss of $5,633. Then there's a calculation of 92 plus percent, so that's 5202. Then you go all the way down to line 10, where it says multiplying the smaller of line 6 or 9, which is 5202 or 142,800. So you multiply 12.5% of the 5202, you get $645. Then you multiply 2.9 of that same number, 5202, you get 120. And when you add both of them, that is your self-employment tax. So in this particular situation, when you go back to the 1040 form, which is going to be line 23, other taxes including self-employment tax from Schedules 2. So there's another form that you have to fill out though, but that number tends to be about the same. $765 is what this 1099 owed, as opposed to over $1,000 as a W-2. Now, that's something to take into consideration, maybe not for 2022, but maybe for 2023. As a 1099, you have a lot of advantages. You have a lot of things that you can claim. Take advantage of them. Don't complain always about those miles that you're putting on your vehicle. When you think about some of the things that you have to pay for in the course of doing your business, like if you're doing gig food delivery work, if you pay for cup holders, if you pay for bags, if you buy face masks, as what I do, if you buy wipes, these things here, those are things that you can claim, because those are other expenses that you have incurred in doing your 1099 work. So if you like the content that's been provided in this segment of the Gig Geezer or in any other segment of the Gig Geezer, hit that subscribe button, give my content a thumbs up, share my content among others, and I definitely welcome your comments in the section below. I'm Inwood Lane, and as always, may your grind and may your hustle continue.